we are in the early stages. There's no doubt in my mind we're in the early stages of a massive bear market, the likes of which we actually haven't seen certainly since 1929 to 1932, and possibly ever. I can understand people saying, where do I put my money? Now, the way I would look at it quite simply is, at the moment, those people are totally committed to the fiat money system. If we are looking at the collapse of the fiat money system, which, in an effort to support the banking system, becomes a dead certainty, this is the John Law theory, which I've been talking about on your show for over a year now, then under those circumstances, you really need to hedge yourself out of the fiat currency system. And there is only one thing to do, and that is to go for real money. What is legally money, and this is a point that everybody misses, legally money is only one thing, and that is metallic money in the form of gold and silver. So, it's not a question of trying to run an investment portfolio where you would say, I've got to control my risk so that I won't put more than 10% of my funds, for example, in any one investment. And no, that's not the way to look at it. The way to look at it is you are totally invested in fiat. If fiat collapses, you lose everything. The answer basically is to hedge out of that.
Gold is a valuable resource because it is rare, and its price usually goes up over time. This is because gold does not lose its value like paper money does, also known as inflation. This means that if the dollar becomes unstable, gold investment can help protect your net worth. There are other reasons why investing in gold might be a good idea according to Alasdair Macleod, but the main reason is usually to guard against inflation and protect their money's value over time. Additionally, silver has been used as a store of value and a medium for exchange for a long time. However, silver does not have as much upside potential as gold because more silver is available on Earth today than gold. When the government prints too much money, prices go up, and buying silver is a great move.
Well, in the initial stages, because people don't actually understand what's going on, I think you're bound to get what Oliver describes as waves. You're going to get sort of falls and rallies in markets. You're going to see falls and rises in commodity prices. I would expect the price of oil initially to double. But in getting there, it's not necessarily going to do it in a straight line. But I think as things go on, as people begin to understand that this is the collapse of the fiat currency system, then I think you'll find that it becomes a lot more sudden and nasty. And it can be overnight. I don't know. You have got instant financial communication, and so this is something that could happen suddenly very, very quickly. As a parallel, I do remember there was a moment in the Lehman crisis where I thought, and I think everyone else thought, how are they going to get out of this one? We were really staring into the abyss. And when you're staring into the abyss, you need a miracle. And that's it. And if the miracle doesn't arrive, then you are in the abyss. And so things can happen very, very quickly. I'm not saying they necessarily will, because I honestly don't know how it'll plan out. That's something that we will know at the time. But all I can say is that while people don't understand what's going on and while the situation continues, then you are bound to get movement in both directions. But I think that the collapse in financial assets and the whole of the financial system is very much what we have in prospect.
That said, if we see an economy-wide depression in 2022, which causes prices to skyrocket, silver should act as a hedge against inflation like gold. Furthermore, silver has industrial uses. For example, silver in solar panels. Thus, if the economy slips into a depression and demand for a specific metal increases, prices should rise accordingly if you buy gold and silver.
It is sort of analogous. I think the way to look at it is not, the difference between the physical price and the paper price, because actually we can't really know that. They are pretty much tied together because people arbitrage out of one into the other and vice versa. But I would comment that what we have seen over the last 2 years is an increasing pressure on the bullion banks from people standing for delivery. It's the amount of gold that has actually been delivered through COMEX has been pretty significant, and the same with silver. So that certainly is happening. But more to the point, I think the way to look at the ruble oil situation and tied in with gold is to look at gold, the gold oil price, the price of oil in gold grams. I mean, if you go back to the 1950s, before the 60s, before the Bretton Woods thing was chucked out, then you're looking at a price which, if we index that at 100 and carry it through today, you find that the gold gram price of oil is down about 20% from that 1957 level. If you look at how the price of oil has behaved in the currencies, all the volatility is in the currencies. It really is as simple as that. And I saw an interesting article today which looked at property prices measured in gold grams. And this is in the sterling market here, the UK market. And since the sort of 1950s, I can't remember the exact date that was chosen, measured in gold grams, property prices here have gone up about 12%, whereas they've gone up thousands of percent measured in sterling. The difference being that gold and things that really matter to us, physical commodities, the roof over your head, and so on and so forth, the price over time doesn't actually change that much measured in gold grams. I mean, it will fluctuate. It could double, it could halve. Not an awful lot more than that in terms of variation. But in currencies, it's a different situation.
So that is Alasdair's overall verdict on whether you should invest in gold and silver in 2022. The answer is yes. So, check it out. Invest some money into precious metals in 2022 because it protects against inflation and economic uncertainty. Here's what you should do if you want to invest a small amount of money in silver. Silver has more upside potential because it is used in industrial applications. However, if you want to invest a larger sum of money, invest in gold. Gold is scarcer than silver, so there is more potential for gain. Remember, your goal should be to preserve your capital and investments so that you can save for retirement, college, etc. In fact, it makes sense for people to own at least 5% of their portfolio in gold and silver, in addition to other investments like stocks, etc.
I think it's some sort of level of interest rates, basically. And as I say, the authorities are going to be behind the curve on that. They're already behind on the curve on that. I mean, for goodness sake, you've got inflation measured by a suppressed CPI running at something like 9%. And what's the interest rate in America? It's sort of 1% or something. I mean, it's so far behind the curve as to be ridiculous. And what they're doing is the governments are turning around and saying, well, our advisors tell us that inflation is going to go higher in the short term, but by 2024 it will be back to 2%. I mean, come on, this is this is complete rubbish. So what they're trying to do is they're trying to justify keeping interest rates roughly where they are, or not very much higher, in the belief that inflation measured by CPI can be either controlled back to 2%, or alternatively, there will be enough of a recession to take it back to 2%. But they misunderstand the nature of money. I mean, I think it's absolutely crazy that the people who are responsible for monetary policy actually don't understand money.